Thanks so much for joining me, Sally. We have been inundated with headlines about the lack of diversity in the workplace. We've heard about Citigroup, we've heard about Oracle, Google, etc., not doing enough for diversity, and it's almost a case of who isn't on the list. As a woman in a senior leadership position, I'm wondering, how are you tackling this issue?
Well, I'm tackling this issue by starting my own company. Because at the end of the day, it's really tough to change cultures of big companies from within. And you can see all the research about the power of cognitive diversity, which is driven by gender diversity, skin color diversity, diversity of background, perspective, et cetera, et cetera. You can see all of the research on diversity that says you won't just earn better returns, you can earn way better returns. And yet, the urge we have to work with people who are like ourselves, to be comfortable in what we do, is just there. And we've all really been socialized in our society that a leader, a senior leadership, is a white male. And so we see the research and we say, in theory, I should hire that person who's way different from me, doesn't make a lot of sense to me, I don't really know how they're going to be successful. I've seen the research, but boy, this individual who reminds me so much of myself, I can envision this. I can envision how this person will be successful. And so we lean on our own experiences for our intuition, and we don't override it for the research. It's not the research just got published. The research has been there, and yet it has not been nearly enough to drive diversity. So how do you change it? You either change it because the CEO and the board make the decision that they are going to do the painful things to change it, that they are going to override the senior manager who's got great results, who's been there for forever, who just isn't into this diversity thing, right? That's a hard thing to do. So either they are going to make that decision, and some are. You see the folks at, whether it's Salesforce or MasterCard, there are a handful of them that are making those tough decisions, or you start your own thing and decide that you're going to build a culture from the ground up that is a culture that represents the best in what we've learned about what makes companies great.
Let's go and give some companies report card ratings. Now, I want to start with Congress. I want to pretend that they're a company for a moment. Diversity-wise, what would your grade be?
Well, they're getting better, because one of the wonderful things after this last election is we not only have greater gender diversity, which I know is what you're asking for, but how about age diversity? How about people who know what the internet is and actually have been on Facebook, right? Who know the difference between Google and Apple? Well, that's so refreshing. So, we the country bear responsibility for this, and I love the fact that we've got some very different, opinions that are coming through loud and clear now.
Real Money's Kevin Kern gave the big banks a report card, and I'm wondering, this sector in general, what rating would you give them?
On diversity?
On diversity.
A C.
A C. Why a C?
A C, because they haven't made much progress since the financial crisis. In fact, as of a couple of years ago, so it's a bit outdated, but as of a couple of years ago, gender diversity has gone backward since the financial crisis. So we tend to think of, diversity is a good thing to do, so there will be forward movement and motion, but in fact it can go backwards too. I don't give them an F because they talk about it and they have a bunch of programs for it, and some of them I really do believe are well-meaning. What I've read about them is that some of them talk about it as being a pipeline issue. It hadn't been a pipeline issue since the 1980s. It's been a promotion issue. When you dig into the research, it's not that there aren't enough women at the bottom. It's not that all those women are leaving for work-life balance, right? It's that they aren't promoted. And so they get clogged up there at the bottom and don't make it to the top. And that's why, we see Citi a year ago came out with their gender pay disparity. And the number that came out in the US a year ago was we don't have one. And then they've just come out with, I think, a 29-30% gender pay disparity this year. Like, what? Did they go backwards? They reported different numbers. The number last year was job for job. Are men and women getting paid the same? This year was overall, are women and men getting paid the same? And what that shows you is another really important problem, which is the women simply aren't as senior as the men.
I'm glad that you brought that up. So McKinsey & Company did a 2018 survey, and they found that 1 in 25 C-suite leaders is a woman of color. Now, you've written that it could take possibly hundreds of years for women of color to close the pay gap. And I'm wondering, how do you speed up this timeline?
Well, look, so let's back up, right? So the gender pay gap for white women is decades away from closing. For black women is 100+ years away from closing, and for Latina women is 200+ years from closing.
That's a long time.
That is a very long time.
Even decades is too long.
And it's not fair. I mean, it's just, you know, fundamental fairness. So how do you change it? You just close the effing pay gap. You close the effing pay gap, okay? You go in, as a number of CEOs have done, and you say, first of all, let's measure it, because if you aren't measuring it, it's there. Because our biases, women have them and men have them too, about gender, you know, tend to be so powerful. So first of all, you measure it, and then you wipe it out. What? Doesn't that mean that I'm going to make less money? If I'm paying these people, isn't going to the bottom line? Yes, in the short term, if you view it as an expense. If you view it as an investment that will compensate these individuals fairly, what may happen, what will happen, is that you're going to have fewer of them leave. When they make those financial decisions about maybe taking another job, or maybe, you know, coming in every day when the boss is sort of, you know, not a great boss and you have another opportunity. And so you just, you know, it's not overly complicated. You don't have to have a diversity task force, you know, and get all the women together once a month to have someone like me come in and talk to them, right? That's delightful, but just friggin' do it.
My next question kind of hits on the point that you already brought up, which is there's less senior women. Yeah. And McKinsey & Co.'s study also found that women get less access to those senior leaders. So I want to put that in perspective. And you already brought up Citigroup. So Citigroup said that it would make hiring women in senior positions a priority, but do you think that that's enough to help women get access to these potential sponsors?
Well, look, sponsors are tremendously important for anybody to get ahead. In fact, when I talk to my friends from college and my friends from business school, and you look around and you say, gosh, she was so successful and she was so promising but wasn't. And you sit down and you have a couple glasses of wine and say, what's the difference between the two of them? What led one to great success and the other not? Is they tended to have a very senior, typically male, sponsor who fought for them. And when someone, you know, on the operating committee would say, you know, she's a little abrasive, right? He would be the one saying, you know, we just said Joe was aggressive, and that was a positive, and now we're essentially using, you know, slightly different words, but the same concept for her. So you know, cut it out, jerk. Or give her that great project and give her the air cover she needed in order to make her way to success. And so, you know, having that kind of sponsorship, it can be, is at a very senior level, is actually make or break for a career.
KPMG's 2019 Women Leadership Study found that women are motivated by pay more than job titles. As someone who switched from a corporate job to being an entrepreneur, are you more motivated by pay?
I haven't made money in so long I forgot what it looks like.
So no.
You know what I'm motivated by? I'm motivated by making a change. So I had this great good fortune to have these amazing jobs on Wall Street that nobody gets to have, right? I got to run Smith Barney and Merrill Lynch Wealth Management and CFO of Citi. Nobody gets to do that. And when I paused and recognized that women don't invest as much as men do, that it cost women hundreds of thousands or millions of dollars over the course of their lives, not the pay gap, the gender investing gap. When I looked and thought about all the tens and tens of millions of dollars the big banks and Wall Street firms had spent on their women's initiatives, that did not work. And I thought, okay, first, I'm a woman. Second of all, I have this experience. Third of all, I can get capital raised in order to do it. Fourth of all, I'm curious enough and egoless enough to do the research to figure out what will get her to invest. When I saw that, I said, all right, you know, somebody's got to do it, and that somebody's got to be me. And so I'm really put mission first, because before I leave this earth, I want to make a difference. And the amazing thing about getting women to invest more is it's obviously good for them. It's obviously good for their families. It's good for the economy. It can be good for markets, right? It's good for our culture. Like, nobody loses, right? There's not, because she's investing, he didn't, what? She invested, I didn't get to invest too. She took all the investing. None of that stuff. So, you know, for me, that's what it's about. Would I like to make money? It'd be fun one day to make some money. But it's more about mission.
I also spoke to KPMG's Chief Diversity Officer, and she told me that she strongly believes in mentorship and sponsorship. And you've said this kind of before, but I want to ask this again. Do you think that this is a key for women's success in the workplace?
Is sponsorship a key for women's success in the workplace? Yes. Is the answer as simple as that? Absolutely not. It's just such a challenging issue. So women, you know, women are over-mentored. You know, I can't remember what the numbers are, but like 10 times as many mentors as men. People who will answer their questions. Everybody, I'll mentor a woman, I'll mentor a person of color. But we have a fraction of the number of sponsors, the people who fight for us, right? So of course, having more sponsors is key. It is a key. But let's back up. How about mandated family leave? Where do women really start to fall out? It's when they have the first child, the second child, and only a teens% of companies in this country have these mandated family leaves, these paid family leaves. And so you have any number of women who you have to come back after giving birth, any number of professional women who, because of our culture and the work culture we have, feel the need to come back to work even if they have the family leave. And we're just looking at it all wrong. First of all, are we so mean a country that only we in Papua New Guinea don't have mandated family leaves? Or the richest country in the history of the world, and we can't give working women who work outside the home, a little break when they have a baby? That's how mean we are. Well, it gets meaner because we talk about the family leave as being an expense. It's an investment, and there's research by KPMG that points to that investment pays off for itself in less than a year. When I was running big businesses, if you came to me with an investment that paid off in less than a year, we did it every time, right? We got rid of other investments to do every time. What? How can it pay for itself in a year? Because women are more likely to come back if they have the time to bond with their family and heal, right? Get the little darling off to a good start. And so you don't have to pay for their replacement, and you don't have to pay for training. So, yep, mentors and sponsors, but family leave is really important.
And I know that you spoke to Tracy Burns about that, and women lose like 1.7, I believe, million.
Oh my gosh. So, you know, if women are more likely to take career breaks, and we're more likely to take career breaks because we are the gender that has the baby, because we still have gender roles within our society that have the woman caring for the child more than the spouse does. You know, we're more likely to take leaves because when we get older, the care for the parents lands on us. You know, we're more likely to take leaves because if something goes wrong in the family, it's more likely to fall on us. And we typically, as women and as families, miscalculate the cost of those leaves. So the example I like to give is if a woman is making $85,000 a year and she takes a 2-year career break, she says, okay, we'll lose a lot of money, it's $170,000. The real number is $1.7 million. And the reason for that is because what we don't typically calculate in is the pay cut she takes when she comes back, right? Which is a double-digit % after 2 years, a bigger double-digit % after 3 years, and by 4 and 5 years, just forget it. And so the impact to the family financially, we vastly underestimate it as a result.
Women live longer than men by a few years on average, and how important is it, especially for women, to focus on retirement?
Oh my gosh. So here are the stats, right? Women live on average 6 to 8 years longer than men do. 80% of women die single. And if you don't believe me, walk through any nursing home in this country where the older men are having the absolute times of their lives, because there are 8 women to every couple of them. We tend to retire with 2/3 the money of men. And if we're women of color, much less, okay? So how important is that it's incredibly important. And I like to say they call them individual retirement accounts for a reason. And that as women, we can partially overcome the gender pay gap by investing. right? We can overcome some of this by focusing on our retirement savings and our retirement investments. And the challenge today is that, again, if you go back to our society and the roles that we have historically adopted, the guys, manage the money and the women manage the family. And even in, Sheryl Sandberg's book, Lean In, she talked about how Dave did the money and she did the birthday parties. I went, I feel like she's gonna be okay on the money. But these are historic gender roles. And in my age, I can't tell you how many women, of my friends, again, from school, whose one husband's, passed away of a brain tumor, one in a car wreck, and these women are left with, where's the money? What do we have? We didn't think. We have made, for women, talking about money so weird that it's almost criminal. Let me give you an example. If you were to leave here and go out for drinks with your girlfriends, you are infinitely more likely to talk about sex than about money. And in fact, I would challenge you that there's no amount of money you make today that you would feel comfortable telling your girlfriends about. Nothing, right? It's either too much or too little or right? In fact, women prefer to talk about their own death than money. That's how weird we've made it. And it goes all the way back to childhood, when the gender roles are enforced and dads talk to little boys about building wealth and moms talk to the little girls about saving money. And so it's a little bit like Reshma Saujani talks about boys are taught to be brave and girls are taught to be perfect. He's taught to build wealth and she's taught to save. And the messages that we then get as we grow up from the teen magazines and the women's magazines have historically been, you spendthrift, right? Don't buy that latte, save that money. Whereas the guys are getting diversified investment portfolio. Do you want to buy IBM? Is it time to sell Apple? Right? And we're getting, are you a Miranda or a Carrie when it comes to money? And so we infantilize women when it comes to money, which leads us to not knowing what kind of raise to ask for, because we don't talk to anybody about it, and being unprepared for retirement. It's really a tragedy.
And Ellevest has a retirement product, correct?
Yeah. So Ellevest, look, we are all about women and money. And when people said to me, you should start an investing platform for women, I was like, that is such a stupid idea. Women don't need their own thing. Quit patronizing us. Shut up today. And then when you realize there's this gap and that we need a place where we can talk about money in a smart way and in an approachable way. As we were talking about, what's the real cost of a career break? Nobody, you're not seeing that anywhere else, right? How do you plan for retirement when the spouse is likely to be gone? How do you take into account in the planning that women live longer and our salaries peak sooner, right? We are the ones who are sort of in a smart, sophisticated, but approachable way, not just telling women you need more financial education, go buy the book and figure out what standard deviation is, but working to really meet them where they are with a product that is sophisticated, parts of which are patent pending, that really meet their needs, as opposed to, Wall Street as it is today, which is based on trading, alpha, et cetera. Nothing wrong with that, but the research shows us it hasn't engaged women as much as it has men.
It kind of seems to me that diversity is a double-edged sword in some cases, and I want to bring up the California law that requires every board now to have a woman,
Yep.
which sounds great on paper, but I'm wondering if that really helps promote diversity.
Yes, it does, because it forces it.
But when you're just having a woman to have kind of that token woman.
Because there are no smart women who are qualified out in California. The state has got thousands and thousands of them. There are so many. Go out to California. There are so many badass women in California. It will knock your socks off, right? So I totally do not buy that, you got to dumb it down. We don't have the right folks. You don't have the right experience. It's California, land of the female entrepreneur, land of the female VC, right? It is such an entrepreneurial state. The problem is not there aren't qualified women. In fact, the board list, my friend Sukhinder Singh has an entire board list. One might say binders of women who are qualified for board seats. The fact is that those who are in power out there believe there aren't enough qualified women. Because number one, they've been socialized that way, right? I'm thinking of a board member. It's a white guy with a couple of people of difference around the table, but not more than a couple, because that's what I'm used to, right? So that's number one. And number two, their networks are filled with white guys, where they have non-diverse networks, so they don't know these people. And so when they go and they say it's time to put someone on board, I've done it a zillion times. Who do I know? Who do I know? That's where you go for your board. Who do I know? Well, I know Joe and Jim and Steve and Tim and John and Jonathan and Stuart and Harvey and Harold and like, nope, no qualified women, right? Like, dude, because you don't know any of them.
Okay, so
yes.
How do you make that the thing? How do you make people put those women on the board?
You have a quota. I know, look, I totally get it. Quotas are un-American and un-apple pie, and if you were there by a quota, you must, be a level, below. And people who are there because of quotas, I don't want to just be there because of a quota. I want to be there because, of my own accomplishments. I get the whole thing. I've stated the whole thing. I don't know that I'm for quotas, but what I will say is when you finally get to where nothing else works, right? You can keep doing the same thing, right? Hey, here's an idea. Let's bring out more research on the power of diversity, because the research from Goldman and Morgan Stanley and the World Bank and the IMF and McKinsey and Deloitte and Catalyst and what, like, that's not enough. Maybe the next piece of research, if we can just get, guys, just one piece of research, baby, like maybe if TheStreet put out, maybe that piece of research would finally be the one that, like, the whole dam is friggin' burst open and we go to diversity. Not gonna happen, right?
That's fair.
So what thing is, you tell me another idea, but maybe quotas is one. And we'll be able to look at California and see what happens. And does that tend to drive performance? Does that tend to drive, more fairness, more representation, and therefore better performance, or is it a disaster? Thank you, California, for testing this for us.
I gotta agree. We gotta let it sit for a little bit and see how it goes. Now, you wrote a piece in CNN Business that stated that diversity initiatives are not actually helping to promote diversity. Do you want to?
I think it's pretty obvious, which is everybody has diversity initiatives. Everybody. Diversity is going sideways. The gender pay gap, as we talked about, is decades or 100+ years away from closing, depending on whether you're a white woman, a black woman, a Latina woman. The number of female CEOs in Fortune 500 companies is declining. So you tell me, we've got one big input, which is existing diversity initiatives, and an output, which is kindly characterized as not much progress, and less kindly characterized as going backwards. So should we keep doing the same thing, right? That's what we do.
Yeah.
Let's face it, it's not working. And that I think leadership teams lull themselves into, it's a pipeline issue. We just, juiced up our women's diversity group, and we're going to go from having, one cocktail, one big get-together a year to one get-together every month, and maybe that'll do it, right? But we need time for the whole thing to sort of filter through, and so the can gets kicked down the road. The only way to change this, because these cultures are so strong, and particularly in a successful company. We're a successful company. Why do we have to change? The cultures are so strong that in order to break it, a CEO needs to make the very tough decision that this is a very important business initiative, not one of 20, not one of 15 or 10, but one of 4 or 5. And that they are going to drive this, and they're not going to let up on it, and they're going to pay for it. Otherwise, I don't see any indication we would do anything but continue to see what we continue to see. Maybe I'll be surprised, maybe moving the diversity meeting from once a year to 4 times a year will do it, but I would be surprised.
Almost kind of like try smarter, not harder.
That's right. Or try different.
Try different. I like try different.
Try different. Say, you know what? We made no progress throughout everything we've done so far. Let's try something new. Let's take the mentor program and let's make it a sponsor program. and that if everybody on our executive committee of 20 cannot find one person of color, one person of difference, one female to fight for and make it part of their professional reputation and maybe their compensation to get that person ahead, to give them what they need and get them promoted through, you know, that could be a way of saying, rather than this very passive mentor program, come to my office and I'll answer some questions for you and hope you leave quickly, you know, to this, that, you know, anything like that, break with the past.
I read that Ellevest didn't see a large uptick in trading during December swings. I'm wondering if women, because they're not as active traders, if they're better investors in a hostile market.
So I am so excited because the bear case, there were a couple bear cases on Ellevest when we raised our Series A. And one was you're digital first, and we've got client service, but we're digital first. And so you're going to grow nicely when the markets are going up, but when the markets go down, that's it, you're done, you're toast. And we went through October, which felt not good, and we went through November, which felt uncomfortable, and we went through December, which felt terrible, particularly the day before Christmas. I'm like, really, the day before Christmas?
I know.
Really? We're doing this the day before? Okay, fine, we're gonna do the day before friggin' Christmas, fine. Felt really bad. I didn't know how bad it was until I saw a chart in the Financial Times that showed not just record outflows, but panic. Right? Record outflows in December, since they started measuring it, panic. What happened in Ellevest? Well, we had double-digit % asset under management growth month over month, record inflows, record growth, and our attrition rate, which has been low since we launched, you know, and from I understand from others, quite a bit lower than other digital first, stayed at a low single-digit % annualized, right? So we came through very nicely. P.S. The other bear case on us was our cost of acquisition for our clients, which was low when we started, would go up, and in fact, it's continued to go down. Different topic. So why do we think it is? There is research that tells us that women tend to trade less, that women tend to, maybe we're busy, check our accounts less, therefore feel the need to take less action. I also believe it's because we built a product for her that lets her know if she's on or off track to achieve her goals financially. Because there is, you know, it is scary to me when the market goes down a lot and you're operating in a vacuum. My portfolio is down X% since 2 weeks ago or a month ago. Oh, right, that's a scary thing. If, on the other hand, you have an Ellevest, which shows you how you're tracking to your goal, which was built with quite a few down markets implicit in our forecast, which works to get you to your goals, not in an average market, but in the majority of markets. And so you can come onto the website and at any point in time, see, well, the market was down a lot. Oh, look, I can still retire on time. Oh, look, I can still buy my house on time, right? And to know that if you don't have time to check it, that if you fall off track, we'll send you an email. And that email will tell you you fell off track. In order to get back on track, to have a 70% chance of reaching your goal rather than a 50% chance, you need to retire X weeks later. You need to deposit another $1,000. I mean, that is so much more comforting than, right? My portfolio is down. So we really built a product to help guide her and him. We have some guys too. We love guys, but to help her really see how she's doing and getting to where she wants to go.
And obviously helping her if we have another Christmas Eve where you're seeing the stock market plummet and you don't have to trade. You can just hold steady.
And it tends to be the most successful, that individual investor. Mutual funds tend to underperform the market by the amount of fees. Individual investors tend to underperform mutual funds because they tend to trade in and out at the wrong time, right? So if you can just get in and sort of stay put, from the vast majority of folks, you're just better off.
Do shareholders have a moral responsibility to push for diversity?
Here's what I would say. The research tells us that shareholders would have better financial results in pushing for diversity. I am partial owner of the Pax Elevate Global Women's Leadership Fund, which invests in the top-rated companies for advancing women, as calculated by the percent of their board that are women, the percent of the leadership team that are women. And since we launched, I'm going to say it's 4.5 years ago, we've outperformed the market. So, I don't know, moral, sure. The country was founded on equality of opportunity. We didn't always exactly live those values. So I could argue that, but I'll go ahead and argue a financial return that I think we're really, through Ellevest, through the PAC's Elevate, Global Women's Leadership Fund, through a number of the projects that I'm engaged in, I think we're really proving it every day.
What's one question that gets under your skin that you're asked a lot?
How do you have work-life balance? I will never forget, I was CFO of Citi, and I was on a panel with the other CFOs. And it was the panel, only female. And here's Joe, the CFO of XYZ large company, and Steve, the CFO of ABC large company. And we're getting our CFO questions, and then, Sallie, how do you achieve work-life balance? I'm like, it's not enough that I'm CFO of Citi. I have a different hurdle, which is work-life balance. And so I, for a while, said, my goal was to be a mediocre mother. I didn't want to be a bad mom, mind you. I did not want to be a bad mom, but, right there at mediocre, the rooms aren't really as clean as they could be. The cookies, although I did bake some cookies, but, the cookies aren't always homemade. My son ended up wearing his lower school shirt for about 3 months into middle school. I'm like, hey, it toughens you up. It toughens you up, kid.
And Oreos are there.
But the thing that I think we need to watch on it is again, something that society imposes on us, that success in the workplace or success in the home is not enough. There has to be some kind of success in both, and that there's some kind of perfect balance that needs to be achieved. It's in some ways a construct of our privilege, that we're able to work, try to shoot for that balance, that so many women and men who are working 2 jobs and 3 jobs in order to make ends meet don't have that privilege to try to go up, but it's a real pain in the to be professionally successful and then have yet another hurdle to go to. So I think we just have to, I think we can be hard on ourselves as women and search for how other women are doing it and try to hold ourselves up to this really impossible standard. And, I just think we need to forgive ourselves for not, having a sort of Instagram lovely life every single day, but recognize that you got to do the best you can where you do the best you can and recognize that privilege.
You say that women don't invest sooner because they want to educate themselves. And I think that this could actually be expanded to shell-shocked millennials like myself, who worry about losing their money the same way that their parents did in 2008. As a Wall Street veteran, can you tell me 3 things that I could do in the market?
Look, I don't know 3 things. I'll give you one thing.
Okay, one thing.
Which is invest steadily in a diversified investment portfolio. That's it, right? And when I say invest steadily, if you had invested the day before, the market crash of 1929 or 1987 or the internet bubble back in 2000, 2001, right before the 07-08 crash, it would have taken you a long time to recover if you invested on that day and did nothing else. If, by the way, what would have been worse is to take the money out right after, right, which is what you would have wanted to do. What works tremendously well, even if you'd invested the day before, is to invest a little bit out of the next paycheck and the next paycheck and the next paycheck, right? Your personal finance viewers are saying that's called dollar cost averaging. I understand. I get it, but let's talk through why. It's because you're buying high here, you're buying low, maybe you're buying low, you're buying low, you're buying high, right? And so you're evening this out to get more like a market-like return. Maybe that doesn't feel sexy, right? Maybe, what I want to do is buy the day after the crash, right? And then sell the day before the peak. Good luck with that, Warren friggin' Buffett, okay? Thank you, Warren Buffett. By the way, even Warren Buffett doesn't market time, and he's a genius. But it's just, find a low-cost provider and just make it a habit. at Ellevest. Sorry, at Ellevest. I'm sorry, something was stuck in my throat for a second.
What's a piece of career advice that you want to give to a younger woman that you wish you'd gotten yourself?
You know, the usual one is sort of work hard and take risks and,
Not usual.
right, you know, when you fall down, get back up, don't let them shame you, don't get embarrassed, you know, failure, but da-da-da-da. The one I'd probably give now that we've gone through this sort of Me Too Time's Up moment, is recognize it's not always your fault. And that if you're working hard and your work quality is good, and you're not getting the promotion, okay, Steve gets the first promotion, Steve deserved it. Okay, Stuart gets the next promotion. I feel like I was pretty neck and neck with Stuart. James gets the next promotion. But by the time Todd is promoted, at that point, a professional woman needs to recognize it's not you, it's the boss. And he may be the nicest guy in the world, but he may be falling into that trap of, I want to promote people like me, right? Or I'm more comfortable with, you know, promoting people who are the same as me. And so I think watch that and make sure that you're networking, that you've got your head up, that you know what's going on in your company, in your industry. We tend to, the research says we women tend to go in head down, like we're at school. If I just do great work, it will be noticed. But you got to pop your head up, you know, and sort of see what the landscape is, have relationships throughout the company and outside. So that if you end up in one of those situations, which the research would tell you, most women do, most people of difference do, you've got the ability to move.
A class action lawsuit states that female Oracle employees were paid $13,000 less than their male colleagues. Apparently, there's less than a 1 in a billion chance that this pay gap happened by chance.
Okay.
Now, I'm wondering, have you ever been in a situation where you're being purposely paid less?
You never know. I mean, the challenge with making less is, one, do you ever know? Two, if you find out what the reason is, right? And is it really that your work quality wasn't as good as the other person? You know, or was there some kind of bias that's in there?
What is your advice to women in this situation?
Well, I'd say my first bit of advice, first of all, work hard, do a great job, be excellent at what you do, and know what's going on around you. So sunlight's the best disinfectant. You can now go to things like Glassdoor, PayScale, or you know, any of a range of different you know, websites that will tell you how much you should be making in your job. Now, they're not perfect, but they'll get perfect, right? And so at least you can triangulate. If you are comfortable, talk to your friends who are in similar positions, right? Some people talk to people at work. Some folks aren't comfortable with that, but have some knowledge about this. And then engage with your boss, not at the moment you're supposed to get the raise, but way before, about what does success look like. And the more you can quantify it, the better, right? Oh, we have 6 audits coming up this year. You know, our goal is to pass all 6 audits, or we have this sales quota this year, or, you know, we want to get, you know, this many new social media followers. If you can quantify it, all the better. One of the reasons that I was successful early is I was a research analyst. And so it just wasn't a question, right? It just wasn't a question. Did my stocks that were supposed to go up and the other ones go down? Right? Were we doing trading based on in my stocks because clients were appreciating what we're doing? Did I get ranked II? I mean, it was pretty straightforward, as opposed to the, well, you know, you did a good job this year, you have no metrics, but you were a little aggressive.
You mentioned this way earlier, and I kind of want to hit the nail on the head again here, because Jim Cramer and I were talking about this, and it's the fact that there are less women in the CEO positions now than there were before. Yeah. And I'm wondering, do you have any idea why that is?
Because there's so few, right? It may well come down to the law of small numbers, that, you know, you lose this one for this idiosyncratic reason and use this one for this reason, and if it were amongst the guys, you wouldn't notice. But because there's so very few of them, one is a big percent. And of course, you know, what we're not seeing is that they're replacing themselves with other women, which tells us that, you know, overall, the bench at that next level simply isn't strong enough.
As a woman in the workplace, especially one that is high-powered, what's a sign that you're being undervalued?
Sign that you're being undervalued, well, when you're being underpaid, when you're getting fired.
That's a good sign.
When you're getting talked over, when you know, your ideas are being taken by someone else when you're not getting board opportunities. You know, all the things that we hear about, you know, and read about that, again, because I don't think it's ill-meaning for so many people the way we've been socialized, right, where women are supposed to be sort of sit back a little bit quieter, guys tend to be more forward moving, that you can feel yourself getting sort of, you know, run over. But let me add one thing. When people ask me the question, did being a woman in the workplace, being a woman on Wall Street, hurt or help you? My answer is yes.
Yes to both?
Yes. Because there were times when being the only woman, you just like, you couldn't hide, right? And so when I was a research analyst and the clients would say, oh, you know, I really like the research that woman is putting out. What's her name? It was me. Versus there's that guy with brown hair who has glasses and wears a tie. And I like his research, like, you have to like narrow it down for me. And then there were times when, as being one of few women, you sort of felt like you couldn't hide either, you know, when times were tough. I mean, I look back to the financial crisis and, you know, say sometimes to groups of people, you know, name the CEOs, and they go through the CEOs. I said, now name the CFOs in the financial crisis, and the name that comes up is Aaron Callan. And I say, now name a male CFO in the financial crisis. And maybe some of your viewers can because they are really involved in Wall Street, but most folks can't name another one. And, you know, that woman was so blamed for what happened at Lehman. When, you know, those who understand the workings of these large institutions, it is the CEO, right? The CFO executes. And by the way, she was only in that job for a pretty short period of time. And she was run friggin' out of New York City. And, you know, the male CFOs, we don't know their names, we don't know who they are, we don't know what jobs they have. And so that was a time when being a woman certainly hurt her in comparison to being a guy because she didn't have any place to hide.
Sallie, thank you so much for joining me.
Thank you.